So the stock market has seen a tiny bit correction lately, but we've seen some growth stocks drop over 10% from their all-time highs. On today's episode, we are going to take a look at 3 EV stocks that I believe have taken a nice dip and are worth at least adding to your watch list. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and follow me on Twitch where I live stream taking a look at stocks you want me to look at. So let's get started. All right, so the first stock we're going to take a look at is NIU Technologies. This is ticker NIU. Right now it's sitting at $40.18 and it was down about 9% today. But from its all-time highs, it is down almost 19% and it's currently sitting at a market cap of $3 billion. For those that are not familiar with NIU, remember this is not NIO, but this is also a Chinese company. They're hitting different markets like we're going to see, but NIU produces kind of electric scooters and they have different brands. They have the NQi series, they have the MQi series, and they have the UQi GT. So as you can see, NIU is also expanding into the Europe region. They also are hitting like the northern part of South America, also hitting some forms of Central America, and they're also expanding with a few shops here in the United States, mainly in Los Angeles and in Florida. So in their most recent quarter, which they reported November 23rd, 2020, so about 3 months ago, they saw revenue growth of about 36% compared to the same time last year. They also saw the number of e-scooters sold has reached 250,000. That's up 67.9% for the year. And most of the sales are coming in China. China made up about 245,000 out of that 250, but they are seeing growth internationally. If we want to take a look at fundamentally, analysts expect this company to grow 23.6% on average for the next 3 to 5 years. This company is profitable and they are positive in cash flow from operations. If we take a look at their balance sheet, they have about 1.3 billion in Chinese yuan cash and about 180 million in debt. So they have a lot more cash than they do debt. They have strong revenue growth, they have a positive cash flow, and they have a strong balance sheet. So right now, the stock price being down about 18% from its all-time highs might be a great time to at least, I said, add it to your watch list. The second stock we're going to take a look at is Tesla. This is ticker TSLA. I'm pretty sure most of you guys are familiar with it. It has a market cap of $685 billion. From its all-time highs, this stock price is also similar down to NIU. It's down about 18.81%. And if you guys are liking this series, let me know what episode I should do more. Should I do another EV stock on sales after this? Or should I hit different markets? I have a huge list of stocks right now that have taken a nice price list. So let me know what type of market you guys want to look at. So like I mentioned, right, Tesla is down 18% from its all-time highs. Just on today, it was down about 9% and it's currently sitting at $714. For those that are not familiar with Tesla, right, they have a lot of electric vehicles and are producing them here in the United States and international. They have the Model S, the Model 3, the Model X, the Model Y, and they also have some form of solar roofs and solar panels for sales. On the most recent quarter, Tesla reported revenue of about $10.8 billion. That was up 46% compared to the same time last year. And like I mentioned, they have other stuff, but most of the money, over 90% of the revenue, comes from automotive revenue, and that includes sales and leasing as well. That makes up about $9.3 billion, and that was up 46% compared to the same time last year. So some of the core technologies that Tesla has are the autopilot and full self-driving data that they are continuously to collect with every single vehicle, the vehicle software themselves, and the battery or powertrain that goes in these cars. I know other people might mention the energy storage and like the solar roofing, but that's such a small part of Tesla's business that I believe that it doesn't make a huge impact right now. Tesla is continuously expanding into other regions in the world. They are constructing their Model Y factory in Berlin right now, and we're seeing that is moving pretty smoothly. They're also moving their Gigafactory in Texas, and it's pretty insane how much these constructions people can do in a matter of 3 months. And here they have 3 months ago to present day. If we take a look fundamentally at Tesla, they are expected to grow revenues at 23.4% average for the next 3 to 5 years. This is what analysts expect. They they are profitable right now, and they are positive in cash flow from operations. If we take a look at their balance sheet financially, they are pretty strong as well. They have about $19.4 billion in cash and short-term investments. They also have about $5 billion, I think, in Bitcoin that they recently purchased. And they only have $10.3 billion in debt. So I want to say they're in a great balance sheet, great fundamentally pace. Like I mentioned, right, strong revenue growth. They're in a great market. They have vehicles being produced already and being sold. They have positive earnings and positive cash flow from operations. So the stock price is down about 18% from its all-time highs. So it might be, again, worth adding to your watch list. The third company we're going to take a look at, like I said, each of these stocks are hitting different markets. NIU, which one hitting more like that inner city market with the scooters, right? Scooters are not meant for long range travels, are meant for more commuting when you live in the city or if you live in real congested areas. Tesla is hitting another market. This is hitting your regular consumers when you're traveling across cities, across states. Tesla is more of that consumer-based vehicle. Then we're going to take a look at a SPAC. And no, we're not taking a look at CCIV today. We're going to take a look at ArcLight Clean Transition Corp. Right now, it is traded as ticker ACTC, but this is going to merge with a company called Proterra, who is hitting more of the public transit type vehicles. So all different markets. So right now, the stock price is $23.25, and it didn't drop much today, even though the whole market was kind of seeing this big of a downturn, but it is down about 12% from its all-time highs. So the market cap here shows is $806 million, but remember that changes after the merger. And if we take a look at the merger, just want to take a quick look, the merger will give it a $2.4 billion valuation for $10. So right now sitting at $25, that is closer to, I want to say, maybe $6 billion in valuation, which I still don't think is too bad compared to some of these other stocks out there. So Proterra is the company they're going to merge with, and they have three main markets. The first is Proterra Power, and this is them having the ability to sell this electric powertrain. And the point of this powertrain is mainly meant for like heavier vehicles, for those commercial EV vehicles or transit vehicles. They have already some vehicles out there that are being powered by them. We can see here some school buses, some public transit, some of those small buses, some regular city buses, some of those delivery for Freightliners. The second market they hit is they are actually making some of these buses, these public transit buses, and there's already a few of them driving around the country. There's more than 100 public transit customers right now. In North Carolina, Duke University, they have one. In Jackson, Wyoming, they have one. In Norfolk, Virginia. So they are actually driving around right now in the United States. The final solution that they have is the energy solution. So here they're also able to do the battery storage, energy management, batteries, charging infrastructure, and everything else that's needed to create some form of huge fleet planning. So the great thing about Proterra is, unlike some of the competitors like Arrival, Helion, Nikola, and Romeo, Proterra already has multi-million real-world miles. So there's a lot of their vehicles already driving. They already have revenue for this year. This is one, they already have about close to $200 million estimated for 2020. So they have miles already. They have true revenue, and they already are producing vehicles. They have a production track record of over 10 years. They have manufacturing capacity, and they have full charging solutions as well. If, like I mentioned, for 2020, they're expected somewhere about $200 million in revenue. For 2021, they have 246. By 2025, they expect about $2.6 billion in revenue. Most of it is actually coming from Proterra Power and Energy. Remember, that's them selling their drivetrain and selling their energy solutions. A very small portion is actually coming from the transit, but transit at the early years of this company's career for 2020, 2021, and 2022, the Proterra Transit, which is going to be these EV buses and transit public vehicles, are going to make a huge portion of the company's revenue. So this company is expected a compounded annual growth rate of about 68% for the next 5 years. So this is a high growth company. After the merger, they're going to have a very strong balance sheet as well. So this is the final company. So I hope you guys enjoy those 3 stocks, all hitting different markets like I mentioned, all down a nice amount from their all-time highs, and it might be worth to at least add them to your watch list before adding to your portfolio. So take care, guys. Have a good night and see you next time. And don't forget to follow me on Twitch, where I take a look at stocks you want me to look at.